Hi guys, this is Sia Jane and welcome back to my channel ACCA and Beyond. So in this video we are going to continue with our revision series, and in today's video we are going to complete chapter number 8, which is systems and control. And the major focus over in this video is going to be objectives of control in the sales systems and purchase and bank and cash non-current asset systems. So yeah, let's just quickly get started. Okay, first the objects of the sales system. Okay, so at the ordering stage, the objective is to ensure the goods are only supplied to customers who pay promptly and in full. Also, we need to make sure that all orders are processed. At the dispatch stage, the objective is that the orders are dispatched promptly and in full to correct the customer. And importantly, all orders are dispatched. At the invoicing stage, we ensure that all goods are dispatched and invoiced, and that invoiced are raised correct accurately. So these are the key objectives. Let's move on to recording. Just a second. Yes. So our objective here is that only valid sales are recorded, and also that sales and related receivables are recorded in the correct accounts, and we must ensure that revenue is recorded in the period to which it relates. And finally, sales are recorded accurately and related receivables are recorded at an appropriate value. Next is the cash received stage. The objective is that the cash is received is allocated against the correct customer, and invoices to minimize disputes. Also, overdue debts are followed upon on a timely basis. And lastly, irrecoverable debts are identified and written off appropriately. Now I'm going to skip the test understanding and illustration and move on to purchase system. Okay. So, at the ordering stage, the objective is to ensure that all purchases are made with suppliers who have been checked for quality, reliability, and pricing. Also, purchases are only made for a valid business use, and orders are placed taking consideration of delivery lead times to avoid disruption of the business. Next, at the goods received stage, we ensure that only goods ordered by the company are accepted, and that goods received are recorded promptly. Finally, at the invoice stage, the objective is that the invoices received related to goods actually received. Also, invoice receipts relate to the company, and invoices are received are correct in terms of quantities, price, and discounts. And now moving on to the recording stage in the purchase system, the objective is that all purchases are related to payables. In sorry, all purchases and related payables are recorded. Also, purchases are recorded accurately and related payables are recorded at an appropriate value. We must ensure that purchases are recorded in the period to which they relate, and finally, purchases and payables are recorded in the correct amounts. Next are the cash payment stage. So the objective here is that payments are made only for goods received. Also, payments are only made once, and all payments are made on time. Okay. Yeah, let's just skip this. Now moving on to problems with frauds. Fraud is specially designed to mislead people. So even strong control systems can fail. Consider this example. A company only deals with suppliers on a list authorized by the finance director. Payments are made after the purchase clerk identifies monthly payments and prepares the checks. These checks are signed by the finance director, who checks the amounts and supplier names with supporting documents. They are they are then countersigned by the managing director, who doesn't check details but knows the suppliers well. This looks like a sensible combination of authorization controls and segregation of duties. So the auditor may place reliance on the control system and reduce substantive testing. However, imagine if one of the suppliers is actually controlled by the finance director. The supplier may overcharge the company regularly, and the purchase clerk is being bribed to stay silent. So even strong controls can be overridden. That is why the auditor must always perform some substantive procedures and not rely on controls. This highlights an important exam point: controls reduce risk, but they cannot eliminate fraud completely. Okay, so let's revise non-current assets now and the control objectives. Um, so the basic idea is the expenditure on non-current assets should be controlled in a similar way to purchase assets to other purchases. However, because of the significant amounts involved, additional control should be in place. The main control objectives are: the assets are only purchased if there is a business need. Assets are purchased at an appropriate price, and the company can afford the asset expenditure proposed. Also, asset expenditure is appropriately treated in the accounting records, and asset expenditure is not completely and accurately recorded. Further, assets are covered by adequate insurance to prevent loss in the company, and documents relating to assets are safeguarded from theft or damage. Now, let's look at some controls and their test of controls. First, recognition for asset expenditure should be made by an appropriate person. The test is to inspect the requisition for the signature and ensure the person has suitable authority by checking an authorized list. Next, authorization for purchases of non-current assets should be at a more senior level. So we inspect the purchase order for signature of appropriate senior person. Finally, severe quotation should be obtained from purchases to get the best price, and we inspect the purchase acquisition to ensure quotations are obtained. An annual asset expenditure budget for each department should be prepared, and authorization should only be given for purchases which have been budgeted. The test is to inspect the annual budget to ensure it has been prepared, and inspect board minutes to confirm it has been approved. Also, inspect orders for asset expenditure to ensure proper authorization. Next, a regular review of repairs and maintenance expenditure should be performed. This ensures that items which should be capitalized have not been expensed in error. The test is to inspect management accounts for the list of repairs and maintenance, and inquire of management how discrepancies are dealt with. Then, a regular reconciliation of the asset register to physical assets should be performed. The test is to inspect the reconciliation and check for approval by a senior person. Also, an asset register should be maintained, including details like cost, depreciation, location, responsible employee, and insurance details. We inspect the asset register to ensure all expected details are properly recorded. Yeah. Next, the adequate insurance cover should be purchased. The test is to inspect insurance policies, review the level of cover, and compare it with the value of assets to ensure it's sufficient. Finally, important documents like deeds, vehicle registration documents, and insurance policies should be stored in a secure fireproof location. The test is to inspect storage facilities and ensure they are secure, and that adequate backups for maintenance is maintained in a case of fire or flood. Now, let's move on to the payroll system. So let's revise their objectives. Okay. So at the clock cards or timesheet stage, the objective is that the employers are only paid for the work they are actually done. Next, to the payroll calculation, only genuine employees are paid. Employees are paid at the correct rates of pay. Also, gross pay is calculated and recorded accurately, and net pay is calculated and recorded accurately. At the standing data stage, standing data is kept up to date, and access to standing data is restricted to prevent fraud or error occurring. Next, at the recording stage, all payroll amounts are recorded. Payroll amounts are recorded accurately, and payroll costs are recorded in the period to which they relate. Finally, for the payments to the employees and taxation authorities, correct amounts are paid to employees and taxation authorities. Payments are made on time, and payments are made only to valid employees and authorities. Okay, I'm going to skip this. Yeah, so let's move on to the inventory system, and let's see the objectives. The main objectives are: inventory levels meet the needs of production and customer demand. At the same time, inventory levels are not excessive to prevent obsolescence and unnecessary storage cost. Also, inventory is safeguarded from theft, loss, or damage. We must ensure that inventory received and dispatched is recorded on a timely basis. Further, inventory should be recorded at the appropriate value, and only inventory owned by the company is recorded. So now these controls relate to the period after purchase and before sales, when goods are stored in the warehouse. First, inventory should be maintained at an appropriate level using automatic ordering systems or checking levels before placing orders. The test is to use test data to reduce inventory below the reorder level and see if an order is automatically generated, or observe the ordering clerk checking inventory levels before placing an order. Next, inventory should be kept in a warehouse and with restricted access using swipe card or keypad entry. Also, CCTV should be in place to monitor entry and prevent unauthorized access. The test is to visit the warehouse and attempt entry, ensuring doors require access codes, and inspect the CCTV system and confirm that cameras are actively monitored. Finally, storage should be kept in an appropriate condition, such as temperature control environments or for perishable goods. The test is to inspect storage conditions and check evidence of regular monitoring like temperature logs. Okay. For fire and damage protection, first fire, smoke, and heat detectors along with sprinkler systems should be in place to reduce the risk of damage caused by fire. The test is to inspect the warehouse to ensure that these systems are in place and inspect certificates confirming they are regularly checked and tested. Next, inventory should be insured in case of theft or damage. The test is to inspect insurance policies, ensure they cover inventory, check that adequate cover is in place by comparing with inventory value, and confirm that the policy has not lapsed. Then, inventory movement should be recorded promptly using GRN and GDNs. Uh, these should be stamped to confirm that they have been entered into the system, and the test is to inspect GRNs and GDNs for the stamp and compare the date on the stamp with the document date to ensure timely recording. Also, inventory count should take place regularly so that physical quantities can be reconciled with accounting records. The test is to review inventory counting instructions to ensure proper organization and control, and attend the inventory count, performing test counts to check accuracy. Finally, inventory should be reviewed during the count for damage or obsolescence. Such items should be separately identified and written down to net realizable value. The test is to inspect inventory during the count and ensure damaged or obsolete items are regularly identified. So, these are the key controls and tests for inventory and very important for exams, especially for audit questions. With this, we have completed with chapter number 8. And if you like this video, please do like, subscribe, and share this video with your friends. And yeah, I'll see you guys in the next video for chapter number 9. Thank you so much for watching.